Hi guys and welcome to the trading show. This week we are gonna talk about
markets, cryptocurrency still fragile, our portfolio, gold intraday good, tip of the week, me reverting on the Dow-Jones futures, and the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Positive week for the markets. We see a clear prevalence of green signs. Let's start as usual from the stock indices. As you can see, the Nasdaq and the mini S&P continue to make new all-time highs in spite of the seasonality, which is not one of the most favorable for the stock markets. Bonds also go up, and this has certainly been helpful for our asset allocation models that have seen both equities and bonds rising. Moreover, the energy sector is still in uptrend. We see in this graph the gasoline, the natural gas, the heating oil and the crude oil future, which are all at the highs. The metal sector is still weak, showing mixed returns as for meats and soft commodities. Notable, however, is the performance this week of cereals. In fact, we see double-digit returns for soy, soybean meal and also for corn future. Negative returns, on the other hand, for all currencies. We can take a look at EUR/FX, which is breaking the 1.20 level, but which is still inside this trading range for several months now. Finally, as regards cryptocurrencies, we have slightly positive returns for Bitcoin, which is also trapped in this trading range in which it has been for a couple of months now. We note that this support is currently holding, but has already been tested several times, and breaking this level would likely open the way for further downside. As regards historical volatility, we note a generally low volatility, slightly increasing in the short term for the European indices, but on the American indices it is really very at low levels compared to its historical values. The implied volatility too shows us values in sharp decline, with a term structure in full contango and a VIX index that is breaking the recently reached lows. So again, this week there are no signs of fear for the future trend of the equity markets. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome back to this new appointment with the analysis of our portfolio. This week I want to show you two strategies again on the gold futures market, and in particular these two strategies are intraday ones, so they will close their positions before the end of the day. The first one will be a mean reverting strategy, and the second one that we will see together, it's a bias strategy. We can start from this first strategy, the reversal one, and in particular, as we said before, we are seeing that the strategy is opening and closing the trade in the same session, and it will enter when a fade breakout, and we can see it also by the label given to the entry order. We can see it here, it's called fade breakout. And of course vice versa for the short side, and this trigger means that the strategy will enter long when a fade breakout on the low of the day before happens. So if the market goes below the low of yesterday, and after that goes again over the low of the day before, and vice versa for the short side. We can see from the strategy performance report that also this type of strategy has performed quite well on a future that is pretty much trend following than mean reverting. And so we are very happy in seeing that also this type of strategy has reached its new equity peaks and overall is performing quite well during the last year. Now we can move to the next strategy that, as we said before, is a bias strategy. And in particular it will enter short during the first part of the session, we can say during the European morning, and simultaneously will close this trade, we can say during the afternoon, and after that it will enter long with another trade, and it will leave open the trade also during the next session for just some hours. We can see in the details these exit conditions. Here, for example, on the short side we can see that the strategy has closed its position, we can say at half of the session during the European afternoon, while for what regards the long trade, here we have an example. We enter after the short side has closed its position, and it will last open for some hours until the next session, as we said before, for just some hours. Of course, at the end of the week, so in Friday session, we preferred to put a condition to close the trades on Friday, of course, of the long side in this particular scenario, because otherwise the original idea of the strategy would have been distorted. Let's have a look also here at the strategy performance report. We can see that after a flat period, we can see during these months, the strategy in coincidence with the start of the next year, here we have made a V reversal, we can say, in a certain sense, and from that point started recovering quite well. And so we are really satisfied of the results of this strategy that is out of sample from 2017. Finally, we can have a look also at the trades that has been made during the last week on these two intraday systems. And this one, for what regards the bias strategy, was of $2,000, while this trade, for what regards the reversal strategy, I remember that here we enter with two contracts, has reached a gain of $1,000. So overall, this week we gained over $3,000 on this market.
Hi everyone, and welcome from Andrea Unger. Today we will have a closer look to the Dow-Jones futures. So this product is listed into the CME group, but in particular into the CBOT exchange. That is part of the CME group, of course, and this product is created on the Dow-Jones Industrial Average Index. And we can find almost the two important versions of this product. The first one is the E-mini Dow futures, and its contract unit is $5 multiplied by the Dow Jones Industrial Average Index value, while the second one, that is more suggested to less capitalized trader, is the Micro E-mini Dow Jones Industrial Average Index futures. And the difference, if compared to the previous product, is that the contract unit, so the multiplier of this future, is $0.50 per point. So the value of this contract is 1/10 if compared to the previous one we have seen here. But going back to the platform, here I have created a script, and as usual I'm trying to see which kind of approach pays more on this kind of product, and here I have applied the same script with which I tested also the Nasdaq last week. So here we will test if going mean reverting on this product is good or not. And in particular here I have created this script that tries to buy and sell on the highest and lowest extremes levels within the latest N sessions. So basically we will create just a sort of channel on the last N session, on the latest N session, and on those levels we will try to go mean reverting. So as first step, after coding the basic strategy, I have optimized the number of sessions on which we want to create this sort of price channel, and as you can see here, the best one is one day, so one session here. In fact, it's the value that gives us both the highest net profit, the highest average trade, and the lowest drawdown, or almost the lowest drawdown. I mean, the drawdown is quite similar to if we would apply 3, but the net profit is less, and also the average trade is less. So in this case, it may be better to reduce the drawdown using some other filters instead of choosing another input, in my opinion, of course. So I have applied the input HL equal to 1, that is the number of sessions on which we are creating this channel. And if we have a look to the report, we can see the strategy since the beginning of the historical data considered, so since January 1st, 2008, would have made quite a good amount of profits, but only on the long side. In fact, we can clearly see here that the short side loses money, or would have lost money, and in general the strategy on the long side looks quite good, promising, so looks quite good. And if we have a look to the equity shape, it's quite nice in my opinion. Of course, it's quite nice considering this is a very basic and raw idea that may be implemented more in the details and further. So for being just a very simple trading idea, it seems to be quite good in my opinion. Even if in the last part here, almost in 2018, the strategy wouldn't have performed well, but 2018 had been a very bad year in general for this kind of approaches, so I'm not surprised to see something similar. And if we go more in the details and we have a look to the long equity curve, we can clearly see here that the equity shape would be extremely interesting. So even if it's still a raw strategy, it seems to be a very good equity curve in general on the long side, while on the short side we would have lost almost every year since 2011. So we would have lost the money with quite significant consistency. And this is the reason why on this kind of product, or almost on the American stock indices, I most of the times trade only the long side, because it's extremely difficult to create good strategies for the short side, because those markets are extremely bullish. So it's quite complicated to create efficient short side strategies. And if we go here to have a look also to other metrics, we can see that the long side is quite impressive. In fact, we have a very high percent profitable here, we have a very high and sustainable average trade, and in the short side, vice versa, we have a very low percent profitable and negative average trade. Of course, the average trade is negative, and we could see also previously that the strategy would have lost money. And finally, if we go here and we have a look to the annual period analysis, we can see that all the years, with the exception of 2018, would have been positive. So this is a quite interesting fact. But as said previously, I'm not that surprised for what regards 2018, because in general it had been a very bad year for all mean reverting strategies on all the US American indices, so such as also the E-mini Nasdaq and for the E-mini S&P 500. And we can see, in fact, also the percent profitable this year would have been extremely low. In general, this strategy, as I said, is good in my opinion, and in this case we are not considering also any kind of protection such as stop losses, break-evens or take profits. So if you want to trade this kind of strategy, of course I have to suggest you, and I would suggest you sincerely, to apply other kind of protections such as a stop loss, a break-even, a take profit, and so on. And in this kind of strategy here, we would have exited every day by the end of the trading session.
No rollover scheduled for the next week. I hope you enjoyed this video, and if you want to learn more about the trading method we at the Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the four-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships, and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.